The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. I want to start the show by asking everyone for a special request. The Chicago Mercantile Exchange has put in this rule thing that we talked about with Rich Anderson on Thursday's show, where the limits on they're called stop limit orders. In other words, if you have a stop in the S&P at 1698 and the market opens at 1704, instead of that triggering a order to be an automatic buy signal, if it's within a limit, it just goes through that price and you're still short, and that is the absolute worst kind of order you could possibly be. That order should never exist. The reason why it exists is because some people think that people are out there hunting for stops and that they're going to get cheated, and that doesn't happen, folks. The Merc has made a bad mistake here, in my opinion. They're going to have to really explain it to me. I've talked to a lot of my friends. They agree with me. The only way we're going to get it changed is if we all, at least some of us, write to them and say, hey, this sucks. This is not the way the market operates. My God, they move the limits out to 40 or 50 points or 40 cents in beans and stuff. So, why not let the people get filled where they're supposed to, at least protect themselves? A stop limit is no good, and most people don't even understand it. So anyway, write your congressman or send it to the Merc and just complain a little bit. But I probably won't make any difference. You get into these bureaucracies. On a sad note, in California this weekend, Cal Worthington, who was a car dealer for all during the 70s and 80s, when I was in California, he had a thing about his dog. He had a German Shepherd named Spot, and my kids were little. This was in the early 70s. And what happened was his dog passed away, and so he brought out a bear, and he called the bear Spot, and he said, this is my dog Spot. And then it was a giraffe, and then it was a elephant, and then it was a tiger. He had all kinds of things, and it was really confusing to my little girls because they said, Dad, this guy's crazy. That's not a dog, that's a tiger. And anyway, he was a master at merchandising cars, and he really made a fortune. And he actually changed the way cars were merchandised all over the world. Well, in the United States anyway. So, anyway, he passed away at the age of 92. He led he had a really great life. I met the guy once, and he was really a kick in the pants. He was really a nice fellow. Okay, on to the markets. Well, we are at the same level as we were last in May, 5 months ago, in the New York Stock Exchange Index. The Dow, the S&P, the NASDAQ, the Russell are all in the new high grounds. It's very difficult, to be bearish up in this area right here, but we'll have to see if the market is this going to be a valid breakout. I will say this without any qualifications at all. This market is not going up because of what Larry Summers did. Larry Summers does not have that kind of power. It might be because of what happened in Syria, but I don't think it has anything to do with Larry Summers. He was, the leading choice by a small margin against Yellen, but I don't think it has anything to do with that. I don't think the whole story is out on, why he decided to pull himself out of the race, for the toughest job in the world and also the highest paying job in the world. But we'll see what happens. But I don't think that has anything to do with that. We'll have to wait and see what happens. This one day, if you remember what happened in May of 2011 when Osama bin Laden was taken out, the market gapped up almost the same amount, about 20 points, and that was the high for the next 3 or 4 months. Whether this is the type of emotional high that you get, we have to wait and see. It's really amazing. It's just these markets. In fact, we were talking about the stop limit on the orders today, and I had several people call me, about stop limits, and they work in the S&P too. If it goes above a certain limit, and they did, you're still basically short, and you either have to wait for the market to come down or to change your order strategy, and that's basically it. So it was a very interesting day because we had gold was up quite a bit, then backed off, came down to a 786 retracement one more time. Silver did the exact same thing, so we still have a potential for silver and gold, to make these really important bottoms that we have going. As a matter of fact, I think the best thing to look at this morning when we start this is to take a look at the gold market, because it has some really nice cycle things and has some absolutely perfect Fibonacci numbers that are coming together here. We've got a call from Colorado. Jim, are you there?
Yes, Larry, I am. How are you doing?
Good. What can I do for you, my friend?
Well, I just heard you talking a little bit about gold, and I was kind of watching it this morning, and listening to Basil, he had said that gold was up $8, and yet GLD was way down. So I was just kind of curious if you might be able to explain that to me.
Well, I'm the last person in the world to explain about an ETF. They really confuse me. I do look at the gold. I posted the gold chart in the room, and we made on Friday down at the 1305 level. That was a perfect 786 retracement of the low we made in August. It was a perfect 50% retracement of the Fibonacci low that we made at 1170 back in late June. So if gold does not hold above 1305 here, we're heading down into the 1200s, and that means we could be looking, at something even more dramatic. So we'll have to let's see what happens. But gold must hold this 1305 level. I think we're trading at around 1318 or so right now, but it's very important that we hold 1305.
So I better use that for a stop then. Huh?
Oh yes, absolutely. 1305 to me would be like etched in a gravestone marker, because if we get below that, there's no reason for it to to hold there, because there's two very important numbers there, and if it doesn't hold, that's what you got to stand aside and see what happens.
All right. Well, that's what I'll do then. Thanks a lot.
Listen, thanks for calling in. I appreciate it, Jim.
You bet.
I hope you're not bothered by the floods up there, because I've been watching it. Yeah, I know my daughter.
I've been pretty lucky, but boy, I'll tell you, there are a lot of people sure going through a lot of devastation. That's for sure.
I know my daughter's a doctor up that way, and she's doing extra work and stuff, and she's telling me about some of the the things that she's seeing, and it's really quite dramatic. You're lucky sometimes that you don't live in places like that, but who knows? I lived in California where they had earthquakes, so I guess that was bad enough.
You never know, do you?
This is for sure. Okay, thanks for calling in, my friend. I appreciate it.
Okay, thank you.
You bet. Okay, the next chart we're going to take a look at is the silver chart, because we did the same thing in silver that we did in gold. We've had this nice little 1-month cycle that has come due last night. We came down to the 786 retracement in that move, just like we did in the gold market. And so as long as silver can stay above 2040 per ounce, we should be okay. And as silver is actually up pretty good today, it's up about 30 cents, and so it's held the low very good, which is a very positive thing for the move. If in fact this is the bottom in gold, I bought some gold on Friday, and we're going to see if it's going to be the right thing to do or not. But so far it has held up a little bit. It's had a $30 rally, which in fact isn't very much at all. Now I do all my charts on Saturday, because I don't have time over the weekend to get everything done on Sunday, because Sunday's afternoon I actually start trading and stuff. So I was watching the VIX index, because I was really assuming that the market was going to have a really strong rally, because we had stopped right at the 61% retracement on Friday. And then, of course, with the move today, the market, gaps down, and, we're looking at potential, another move to the new lows possibly, in this, if this is, in fact, a valid breakout. One day does not make a valid breakout in this thing, so you're going to have to, wait to see if it's going to follow through to the upside in the stock market. But, frankly, there's so many other markets that are fun to trade, like, the currency markets and stuff. It's really very, very, very important. Now, I wanted to I wanted to share with you something here on the British pound, as a matter of fact, because this is the one that really has my key thing to look at here. So we got a call. We got a call here from John in Philadelphia. Are you there, John?
Larry?
Yes.
Oh, sorry.
Yeah, John, are you there?
I apologize, Larry. I thought I was second in the queue. Good day to you, sir.
I just saw your name pop up. I didn't. I see. Oh, I see Vince's name too. Vince can hold on a little bit. He's a very cordial gentleman. So since I've got you on the line, go ahead, John, and then I'll take Vince after the break. So
yeah,
fire away,
very good, Larry. My apologies to Vince. Larry, you have such a long history, actually, dealing in real time with the markets. I was curious, your thinking about gold, looking at the monthly charts, and thinking about history. I wanted to share with you, Larry, how I had made an observation, how this bear phase in gold, which took place from September of 11 into June of 2013, how we fell from, 1900 down to 1200. I can't help but look at the striking similarity in what gold did starting at a top near 200, an order of magnitude less with a $200 top December of 74, and falling for 18 months down to $110. 200 down to 110, 1900 down to 1100. I'm wondering, do you respect that similarity in these two market time periods, and speculate that in fact gold from here might follow the kind of path that gold followed after that bottom in September 1976 at 110?
John, I'm certainly aware of the pattern, because that pattern was the one that made my career at Drexel Burnham, because I started at Drexel in 76 just as the market was bottoming in gold and silver, and I was incredibly bullish for the next 5 years. And I was sort of like you pick up an acorn every once in a while to feed yourself, and that was mine. And I was very fortunate at that time. I got out in January of 1980. But you're right, I do look at those things, but what I have to do is, because we have such good volatility and prices that are 6 times what they were then, that you have to be able to look currently of what you're looking at. So I go back over the last 5 or 6 years to find these ABCD patterns, and we had this monster form down at 1170. John, we got to take a break. If you'll stay with me, I want to talk to you some more about this, because I know you specialize in silver. And then Vince, if you'll be patient, I'll take you too.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads, so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back with John from Philadelphia. John, we were finishing our thing on the gold market, but John, silver is really holding up well. Given the situation where gold is broken quite a bit. I think the silver market is done extremely well, and the fact that it's up 30 cents today and couldn't even approach the lows of last night. I think that's a very positive thing.
Terrific, interesting. Larry, I might follow up one last question. Back on September 7th, 2011, a friend of yours from Oregon called into your show and said, hey, gold is topping right there. There was a Fibonacci time relationship that targeted September 5th, 6th, 7th, 2011. I'm just curious. That fellow nailed the top precisely. I'm wondering if you've spoken to him in the past months to get his, see if he sees anything particularly interesting in this time frame.
Well, John, unfortunately, I have not. I know the gentleman. He's a very he's more of a recluse than anything else. I've known him for many, many years, but he does not share very much. But at that particular time was one of the few times where he came out and was very adamant about it. And of course, we were watching it because the open interest was dropping, and in both silver and gold, which is a very, very sign when prices are going up. So he was spot on. I will try to contact him. Unfortunately, he doesn't even have email, so I'll have to mail him a letter.
Terrific.
Yeah. Okay.
Hey, listen, Larry, thanks so much. I appreciate it.
Thanks for calling in, and we'll give Vince his my apologies, John, because I only saw your name pop up. Okay.
Very good. Thanks.
You bet. Vince, are you still there, buddy?
Yes.
Thanks for holding on. I just looked up and all I saw was John, and so I apologize to you, my friend. What can I do for you
don't
today?
Have to. You are my friend.
Okay.
I have brain fog, and sometimes I speak slowly. So it's better to go on to a guy who speaks a lot quicker. But anyway, I just want to tell you a little story. I was trying to bone up on the Fibonacci again, looking for books. I had one. My son took it. And I'm looking, for a book to find, to read again. I forgot most of it, but there was a very pleasant surprise. I think it was called Gecko. Some came on, and the guy's explaining this new system that he's putting out. It's been around. He says, I have an expert working on it. And he said, Larry Pesavento. Do you remember that?
No.
Well, there you were, standing next to him.
I've met so many people and been so many places through the years, Vince, I just don't remember that at all. I wish I did, but I don't.
Yeah, you had a light blue blazer on and black pants and
that's the only shirt. That's the only jacket I have is that blue blazer. So that's no big deal.
Okay. I want to tell you before I got sick, though, Larry, I bought gold at $265 an ounce, and everybody told me I was crazy.
Well, as long as it doesn't go below 265, you're okay.
Yeah.
Listen, thanks for calling in, my friend. I certainly appreciate it.
Okay, take care, Larry.
You bet, buddy. I hope you're feeling better, too.
Little by little. I'll get there.
Yeah, there you go.
Take care. I hope everything's going well with you and your family.
Yeah, my grandson's pulled out of it, after he's only a month old, and he beat the old Grim Reaper pretty good. He's home now, and he's gaining weight, so everybody's safe right now, and, of course, we're very blessed that he's all right.
Good. Another trader coming down the pipe.
I hope so.
Take care, Larry. God bless you.
Okay, thank you very much, Vince. Okay, I wanted to mention on Thursday I'm not going to be here. I'm going to be speaking in Seattle at the Market Technicians Association meeting. So we're going to go up and give a little speech there. And then I will be back in business on Monday. But I do have to travel on Thursday, and it's early in the morning, so we can't really do it. I have a request for a chart on crude oil, and so I think the best way to do crude oil is to look at it on a hourly chart, because it really shows the beautiful Gartleys that are here. We've had when the market made its big top up in the 112 level, which was the 786 retracement of the previous high. We've had two major Gartleys with these lower highs all the way down. We had one at 110, and then we had one at 109. Now we're at real critical support at this 106 level, because if we break 106, that tells us we're going to go down to the 102 level. But this market is bearish. If you get a chance to sell it, but you got to wait for an ABCD. 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to take a look at the Treasury bond market. It was up very strongly last night, given all of the things that were happening that were attributed to Lawrence Summers' not resignation, but pulling his possibility of being the Fed chairman. I don't think that would cause this. But anyway, it opened at the 786 and has since dropped a full point. We're almost back to where we were on Friday. So this could be a reversal type day in Treasury bonds. It doesn't make any difference what's going to happen with Treasury bonds. We're looking at higher interest rates for a long time, folks. This major top that has occurred is huge, and as you can see, every time we get a rally, it's very short-lived, and then it starts down. We have two things happening in the economy that I think are very negative. One is the fact that we have higher interest rates coming that acts as a tax, and then also we have Obamacare. And, I'm in that age bracket that, they're coming, they're telling me what I'm going to have to be paying for things. And it's already increased my cost by more than $300 a month, and it hasn't even started yet. So it's going to be interesting, what's going to happen here with all these extra costs, because they are basically de facto taxes that people have to pay. And so it's not easy for them to to come in and do these things and get them done. So I don't know if that's going to affect the economy or not. The stock market doesn't care about it, because the stock market is not the economy. The stock market is a market of stocks that people speculate in, and we will see, what happens. We've had this situation going on in the market where there is absolutely no fear in the market at all. There's none. I mean, they just don't have any fear at all. If we take a look at the VIX index, which we looked at once before, but I wanted to. This cannot be right. I don't believe this. Is this telling me the VIX index is doing nothing today? Give me a break. I missed Basil's show today because I had something to do. I can't believe this. This VIX index hasn't even moved. Wow, that's unbelievable. It's still hovering right near the 61% retracement. That gives me a little bit of hope that maybe this market can turn around. We'll have to wait and see. But I was surprised that the VIX index didn't gap down and at least be trading, below the 1340 level. Maybe it just is a lagging indicator. I don't know. I trade the VIX index about once or twice a year. So at this particular time, I thought for sure that the VIX index would really be getting hammered today, and it's down. Very, very marginally compared with, the stocks being up 170 in the Dow Jones, and that makes, a big difference, in that particular thing. We have a situation in the euro that I think is very important that we look at, because that's the major. Hold on, let me get it up here so we can put it into Tiger TV. This is the major of all of the currencies because it's 53% of the U.S. dollar index, and this 5-point reverse wave that we had happen in late August is still in effect. Today's high in the euro came in at the 786 retracement, up at the 133.80 level. And now we're trading, about 40 pips below that, which isn't much. But considering all the news that was going on last night, I was almost a assured event that we would be getting above 134, sometime this morning. But that, in fact, has not happened as yet. We will have to wait and see if it does. But as of yet, that has not occurred. So this pattern that we're looking at in the euro, this 1, 2, 3, 4, 5 reverse point wave, it's also a Gartley pattern. It's still in effect. We're having the rally back right now. So this level at 134 in the euro is extremely important. And, that's they're very, very important, because if we get above 134, that tells us that we're getting ready to possibly make an attack on the 786, which would be up around the 137 level. And that would be a pretty substantial move of around $3,000. You just can't stand in front of that for any reason at all. It's just too much. Everybody is really bullish, all of these things, and frankly, they have a right to be, because they've been some pretty big moves. But we have a situation in the S&P financials where we're making a head and shoulders pattern, and it's coming off of a 1.618 expansion. Where the head came in off of the January 2011 high. And this is also something that I think we have to look at. Now, I don't trade ETFs, but this is one that is very popular, so I do follow it occasionally. But it was brought to my attention that this head and shoulders pattern is, in fact, moving along, pretty good at the same time. So that's the main thing we want to watch in the financials. Oh dear, I forgot to turn off my telephone. Give me a second here. It's probably Bernanke asking for some advice again. I can't answer the phone, so I'll just being on a radio show, and you forget to turn off the phone. With Sarah not here, folks, I'm at a big disadvantage because she runs the whole operation and makes sure that I don't get into trouble by not putting in my taking the phone off the hook so that I'm able to, see what's going on. Now, in order to take a look at what's really happening with the financial markets, the S&P financials, the S&P financials on the long-term basis, going back to 2007, have not even been able to make a 50% retracement. And so that's an incredible difference, in my opinion, because the the rest of the markets have made new highs. You know, the Dow and the S&P and the NASDAQ have made new highs from 2007, and yet the S&P financials haven't. And the financials were the one that started, you know, the huge move down, and that's where the real break came. Maybe they just need more time, you know, to get a little bit better. And, you know, we'll see. I can't imagine why they haven't asked Jamie Dimon to become the chairman of the Federal Reserve. I think that would be great, that they would be able to look at him as far as a one to run the money, because he's certainly done a great job of keeping J.P. Morgan out of business, that's for sure. Now, I wanted to post the chart for, if I can get the camera to work. Uh-oh, there we go. Okay, I wanted to show the difference between the Nikkei, which is, you know, in this real expanding triangle, along with the Japanese yen. And it's telling us that, you know, the market has made a major correction up there at the 786. And now we're determining whether the market is getting ready to move, you know, substantially one way or the other. The dollar, the Japanese market itself against the currency itself still looks incredibly bearish. And it has a lot of things to tell us that we are, you know, getting ready to go down even lower. As a matter of fact, today, I did this chart on Saturday. Today we got down into the 98 level, almost to the 97 level, and the market looks like we're heading down, possibly even to 94 in the Japanese yen versus the U.S. dollar. This would mean that the Nikkei has most probably topped and is also heading for, you know, some lower ground. Someone just asked me a question, and they said, is the price of gold, you know, etched in stone that if we go below 1305, and I believe it is, because we had a very strong cycle bottom there. It had every potential of holding that level, and as long as it can do that, it should be able to, you know, have a pretty strong move in that direction. I have to move to a different subject. Someone's asked me another question about Apple, which is, you know, something I watch all the time because of the fact that the whole world is using you know, Apple products and everything. And as you can see, you know, Apple is down today in an up market, which to me is really hard to do, because when you get a stock that won't go up, with all the news that's happening, you've got a big problem in that stock. So I have to refresh it because I was out on Friday. But give me 1 second to refresh this. It takes just about just a few minutes. There we go. And we've gapped down once again after making the big, you know, A, B, C, D move. Give me a second here. Boy, it's tough doing it. Okay, someone asked. Okay, I just want to show you that the Apple is a very active stock. It's down sharply. We've gapped down for whatever the reasons were 3 or 4 days ago. We gapped down again today, and for the market in Apple to gap down today, with the Dow Jones up 160 points, if you're long that stock, you've got a big problem. That's that's the bottom line. There's just not much you can really do about it. It just looks very, very bad. Now, the question that someone posed to me was about the British pound chart, because there were some wonderful timing things that were on the British pound chart, and I wasn't able to talk about it because I was talking with John and then to Vince. But this is really important here in the British pound. If you'll notice on the British pound chart that I posted into Tiger TV, there are three right triangles there, and each of them designates the time, and that means the time up during that move from the low to the high, the low to the high, and the low to the high. All of those are equal. That's going back to July 8th. There's been 3 of them, and today is the day where the market is supposed to be completing this particular topping pattern in the British pound. Now, there was a possibility it could have made 160, but we only got to 159.88 or something like that. So this is telling us that if time and price are correct, that we are at a major point from where we've completed this major bottom that we had on July 8th, and we've been going up for 2.5 months, just like we did from March until June. Those were exactly the same type of moves. The move from March to June this year is very similar, not very similar. It's exactly to what we were in July through September now. So this tells us that time and price are now correct in the British pound, and we should be getting ready, to move, to move to the downside. That's what our $64 question will be, and then we will find out, what we're looking at that point. So I just wanted to. Someone asked another question about the gold market, and I don't know for sure if the 1305 is going to hold. I really don't. I don't know that. But I'm looking at silver, and silver is still up 30 cents on the day, and it's going to be pretty hard for gold to get creamed if silver is still holding its own. So that's a very, very positive thing in my opinion. So we'll have to watch to see if that also is going to be something to to consider. Platinum is down on the day, but platinum is more of an industrial metal than it is a metal of precious. I know it is still a precious metal, but if you own platinum and you go in to try to sell it, it's very difficult because first of all, there are platinum bars out there that are counterfeit. You have to get it assayed, and it's very expensive to do that, and it's not worth it. With coins and silver, gold and silver, you can buy the bullion coins. They have with the the eagles on them and stuff. The $20 gold pieces that they make, 1 ounce coins that we make for the U.S. government, and then also there's still Cougarans around, but there's maple leafs and other coins that you can use, and those are they're identifiable and they're easy to see, what the content is if you know how to do the little test of, tapping the coins together, because silver and gold have a characteristic ring, and if you're ever in Saudi Arabia or Morocco or someplace like that, and you go into one of the markets, you'll see that the silver and gold dealers have a little pedestal there with a little gold and silver hammer, and they put the gold object on this pedestal. It's a little tiny fulcrum, and then they tap it, and the sound that makes tells them the exact carat weight of the gold, and will also tell them the exact content of silver when they do that. It's just really amazing. I learned to do this when in my days of when I was at Drexel, because we were selling gold and silver during 76 through 81 while I was there, and we mainly dealt in Cougarans and maple leafs, and we always tested them that way just to be sure that we were not looking at something that was that was going to be phony. Let's see, one other thing. About the foreign currency, it's really important that the U.S. dollar index stays above 80. I know it's trading at around 80, 81 right now, and 80 is quite a ways away, because if we go below 80, that means that they're going to trash the dollar, and all these things could just go crazy to the upside. Okay, we're going to take a little break here. 877-927-6648.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and someone asked me about the counterfeiting of bars and things like that. And believe me, just because somebody stamps a bar that says it's 22 karat or 24 karat gold does not mean that's what it is. There are a lot of coins and there's a lot of bars out there that are, basically they're nickel and copper plated gold, gold plated with copper and nickel on the inside, and unless you cut it open, you don't even know. You have to do that test to see if it's right. As you know, we spend a lot of time in Hong Kong, Sarah and I see a lot of these coins. You see a lot of silver dollars that were made in you see a 1794, silver dollar or a dollar that is worth probably $7,000 or $8,000, and they're selling them on the street for $4. Well, you got a pretty good idea that it's basically counterfeit. So you got to be really careful. There's so much counterfeiting that goes on in the world. I mean, if you go to Hong Kong, you have to be careful if you buy a Rolex watch, because you'll buy a Rolex watch and it looks exactly like a Rolex watch, and it will be gold. It'll be 10 or 14 karat gold instead of 22 karat gold, and yet they'll sell it to you for about $12,000. Well, it's only got about $4,000 worth of gold in it, and that's how they make the money. But they do it all the time, and even legitimate coins, jewelry shops do that. So you got to be careful. The other thing is that's with intellectual property rights that are going on. if you buy Louis Vuitton or Coach or Dolce & Gabbana, things like that, there are all kinds of copies that come in from China into Hong Kong. And the people that from China come in to buy the real things, they stand in line in front of these high-end stores where the purses are, they start at $1,000 and they go to $20,000 for a handbag, and they'll stop and they stand in line to wait for this, and yet many of these are sold as they're counterfeits. In other words, they buy them, they look like they're in the Louis Vuitton shop, and yet they're really not. If you remember, a few years ago, there was an Apple store in Beijing that was selling apples, at the Apple the iPhones, taking orders for them. They took orders for a month, and yet it wasn't an Apple store. When people came to collect, guess what? They weren't there, and they do everything by cash because very few people have credit cards over there. The average wage is only $8 a day. But overall shopping in Hong Kong is just absolutely wonderful. It's if you know what you're doing, it's a great place to shop. It's a great place to visit. It doesn't cost very much to visit there. The hotels are much cheaper than New York. The food is incredibly good and a lot cheaper. Transportation is 1/10 of what it is in New York. It's just if you want to buy a house, that's where they get you, $10,000 a square foot. So a little tiny house, run you $1 million for nothing. And the reason for that is that the Hong Kong government came up with a great idea. Say, we'll let these people from China come in if they buy at least $750,000 worth of real estate. This was about 5 or 6 or 7 years ago. And sure enough, what they do, all these rich people from China came in and jacked up the price of Hong Kong real estate. Now it's at the point where people that are in Hong Kong can't even afford to live there. And so that's where the real problem lies. Now, the last chart that I posted into Tiger TV today is the copper chart. And if you'd have showed me this chart, and I'd been on vacation for 3 years, and you'd asked me where copper was with the stock market trading at 15,000 in the Dow, I would say copper had to be around $4 to $5 a pound, and yet it's at $3.22 a pound. It's had nothing but lower highs for 3 years. It has no sign of even a bottom forming. This last little rally that we had, stopped dead on. Listen, folks, you live every day in an attitude of gratitude, and may God bless, and do something nice for your fellow man today who has less than you.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move, it's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.